evening, guys. So I thought I'd do this video and really just dive into the best trading setups that I'm looking for all the time. All right. Now you got to bear with me with this one. This is by principle. It's going to be aimed at scalpers and of course day traders like swing traders and maybe holders as well, or position traders as I like to call them. All right. So how do we go about finding these certain plays? All right. Well, let me bring something to you just to give you an understanding of the basis of plays that I'm always looking out for based on certain factors that when you look at it, you say to yourself, okay, yeah, is it possible that this could play out? What's the environment like? Because this is the key thing. You have to know your environment before you even consider placing a trade. So let's roll with it. This image in front of you, I shared this earlier on to the patrons, and it was to help them open their minds into understanding what can this situation with the tension overseas, what is it actually going to do to the marketplace? Right? Because it seems to be a little bit staggered. There's not the activity that we would normally expect. You know, the idea of the word war itself, that's going to be a problem. And equities, they usually tend to react accordingly to these sort of discussions, which then grants the question, you know, is it really happening? Or are they just trying to keep people on the idea that, yeah, it's never going to happen. Let's just carry on doing what we're doing and the markets will dismiss it. And then before you know it, it actually plays out. And then everyone is caught on the wrong side of the trade. Okay. Bitcoin's made this move to the upside. We had gold that came towards the projected zone that we did today earlier on in the stream, where they came back into the previous zone of liquidity right there. Remember, the idea was that if gold is going to be an asset that you want to put safety into, you're going to want to get it cheaper before you can actually get it moved to the upside. In other words, it's only going to favor institutional traders if gold is cheaper. So the market maker, in principle, moves price down lower and then triggers the interest to the institutional trader to start buying gold up. So this would be a classic buy the dip scenario in gold. All right. Same with the equities. You can see that they made a sharp move to the upside. And everyone was like, okay, so why is everyone dismissing it? You know, there's a war pending. Why are the equities rising? Now, what I was trying to convey to everyone was, look, if this move by Bitcoin is solid, a test of the 50 EMA and a move away from it will need to be on the cards. But this chart right here, the US dominance chart, kind of gives you a heads up into understanding what they were likely to do. You see, this zone right here was also in the video and in the stream from New York earlier on today. So if you are new to the channel, make sure you do catch the New York sessions. All right, the pre-market sessions of New York. I always go live 2 p.m. Monday, Tuesday, and Wednesday in the afternoons. That's London time, 2 p.m., which is about 8 a.m. New York time. And we try and establish what happens in New York so that we can work out and see what happened in the end at the end of the session coming into 10 p.m. at night UK time. So that's why I always stream twice a day. All right. Now, this play right here is an example of the zones that I like to exploit. Now, this is on the 5-minute time frame, and you can see the W formation that potentially is being developed on the USDT dominance chart. And the principle was that they were going to come back into this area, which they did. And then the idea is, given the fact that they've been trading to the downside for quite some time, all right, we are expecting them to show support in and around this range right here to move away from it. Okay. Now, if we look at what's actually happened, they've followed through with that intention. They came through and they've shifted all the way back up towards the daily open of the USDT. So traders are rushing towards safety in crypto. Look at Bitcoin. It's come all the way down, recovered the green vector zone, failing to hold the 50 EMA on the 1 hour time frame. Just tells you that this move was premeditated to initiate a stop hunt rise, take some advantage of retail traders that have got the short liquidations, get them to commit longs, and then shift back down into the range because people need to do something. The idea of fear is being installed across the board. People have got trigger fingers where they just really want to get involved in trading. All right. So this is an example of what I like to exploit, and I like to do it on smaller time frames. Okay. Here's another example. Let me expand out Bitcoin. I love to trade these big spikes in price. That just gives me a massive indication of market maker behavior. Okay. Especially these plays right here. So this is the green candle, red candle formation, which I talk about in the masterclasses. And the idea behind this formation here is the market maker, in essence, is setting up traders for a trap. He pushes price to the upside to get them convinced that price is going up. He has every reason to believe it's going up because, look left, the market makers come back to previous zones in the chart where he had opened longs. So when the retail trader is excited and hopeful that Bitcoin's going to moon out to 100K in less than 15 minutes, he starts buying in that area. Market maker is selling. At the same time, he's realizing a return on his previous longs that he had built by hitting the retail traders' liquidation points that were opened on the way back down. Right, I get it. It is kind of confusing. How are you making sense of when price is going up and when it's going down? The key thing to look out for, ladies and gentlemen, is speed. The speed of the candle is when the market maker is showing his hand. Because there is no person or entity out there that can move the markets at the pace the way the market maker moves it. No one. All right? The reason why traders were going long in this zone is because the market maker was giving them the reason to believe it was going to go back up, because Bitcoin has been dropping to the downside. So whenever I see this sort of thing happening, I'm definite on the grounds that it's going to be retracing back at some point. And the idea is if I've managed to make myself believe that I've caught the bottom end of the range, then I'll be placing positions in around this area right here, and I'll be having, in essence, a probe trade. In other words, I'll be testing to see if it's going to continue higher. So if I manage to catch a trade, say I come to the charts and I can only see these final candlesticks right here, all right, so I can only see this stuff, and it's already tried to make its way back up a little bit, I say to myself, all right, I may have missed the boat in order to test if this move is going to go higher. So then I will put the majority of my position in a sort of a section right here. This is where I'll be looking at going long, all right, that zone right there. Now, within that zone, that's only on the basis that I've missed out on this move to the downside, because ideally I want to be seeing this in real time so that I can work out how likely are they going to break down lower and how long are they going to try and contain this zone for. Okay, let's make the assumption that I entered at this point right here. Now that's where I'll be testing the trade, and I'll be saying to myself, if it can break above more than 50% of this vector candle right here, I will then consider adding more of a position. Now you can see in this instance, price did spike above it, but came all the way back down, and then we saw another attempt lower, and then it's come all the way back up. So there is also another factor when you're trying to get a position in. You've got to be able to, in essence, make sure that you allow the trade room to breathe, which then comes to the idea of leverage trading. Leverage trading does not give you the luxury of being able to let price action breathe if you're going in for $50 at 100x. All right, you've got to be very meticulous when it comes to those sort of plays. And also, don't make the mistake of thinking that because you may have a 10k account, all right, you then have to put down size and open a 2k position at 100x. You are screaming for failure there. You are setting yourself up for madness, emotions running up and down. Your heart rate is going crazy. Like, why would you do it to yourself? Why would you be managing money correctly if you're already setting yourself up for failure with wild leverage sizes? Okay? So that's why I say to you, try and just test the waters. Okay? It's called probing. Testing, okay, let me open up $100 trade right there, and let me just keep my leverage to a minimum. Try and go in at 10x, 20, 30, 50, I don't know, whatever's comfortable for you guys. At the end of the day, your relationship to what you understand as a, say, if $50 loss is too much for you, fine, reduce it. If $100 loss is okay for you, fine, stick with $100. If $1,000 is not a problem for you, fine. Make sure you factor in the freedom for price to move up and down when you're making a choice about an entry. Make sure you understand your environment. Where have you come from? Which is why these plays right here are one of my favorites. I love to try and exploit these because my goal is to try and capture the majority of the retracement back up from this principle of the return of the vector candles. Look what's going on in the chart. You can see we've moved away from the moving average on the 1 hour time frame, and in a period of 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, roughly about 12, 15 candles in this area here. All right, we are waiting to see if they're going to do the stop hunt rise, stop hunt low, and try and come back into the moving average. So if you opened a trade in this area here and set your stop quite far down, all right, and not have to worry about leverage or liquidation, you would be able to allow the trade to breathe, and then once it realizes your objective, which is to get back to the 50 EMA, even if you saw this big move up and retracement back down, you would be comfortable because it was nowhere near your stop and even your entry itself, you know? So it's all based on you placing the right entry, which is going to allow the trade to play out and have flexibility to move, all right? So a moment ago, I was talking about this green candle, red candle formation. Now, this is one of my, it's not one of mine, but it's something that I noticed in price action when I was studying the systems so many years ago. Well, I say so many years ago, but I stumbled across this, the hybrid system, the two systems that we talk about, which is the PVSRA and Steve Murray market maker method. I noticed this red candle, green candle formation was appearing all the time, and price was doing something after it appeared, okay? Usually when you see the green candle and the red candle appearing afterwards, it is an indication that they're preparing the shorts and longs at the same time. Taking out the shorts, adding shorts, taking out the longs, adding longs, okay? And whenever these two candlesticks appear, the next candle will correspond to the intention of this candlestick, which was to move to the upside. All right. Keep an eye out on plays like this, ladies and gentlemen. They do serve their purpose. Okay. Another one strategy that I like to actually, a couple of trades that I always end up taking. All right. The W formations, they usually play out better on higher time frames than they do on smaller time frames. So if I go on to the 1 minute time frame. Now, when you're trying to establish if a pattern's going to play out or not, the one thing that I always explain to people is this. Always use the 200 EMA on the 1 minute time frame to really understand if price is going to bounce from that zone or not. All right? Because you can see how many times price hits the 50 EMA. Now, here's a little trick. People are like, I don't know if this is a W. I don't know if this is an M. I don't know. Well, look, just go to the chart and look for a W and look for an M. Here's one for you right there. Okay. Now, when you look at it in hindsight, yeah, it's easy to talk about. Okay. Easy to talk about. But guys, how many times are you going to witness these patterns appearing? See, when you know and understand what is required of you in terms of the hybrid system, you're going to see these play out all the time. Many times I've put up images of before and afters, and these are things that I've done on the lives to help you understand the likelihood of the pattern playing out. Look, this thing right here, how were we to know that that was going to play out? We understood what was going on in the chart in the bigger picture when we pull this up right here with USDT. Check it out. Look to the left. There is previous zones of liquidity where traders had previously sold off from. Now the price came into this range right here, formed a pattern, and then moved away. You see, the thing is with this, right? This is based on people's psychology of when they are in fear or when they're feeling risky, when they want to try and put money into trading, okay? When it's dropping, people are rushing to get their money into Bitcoin, altcoins, you name it, whatever they want to do. When it's rising, it means traders are seeking safety by taking and selling their positions and putting it back into USDT. The principle of this chart is to factor in the idea of futures traders only, okay? And of course, you've got those guys who are holding cryptocurrency and they probably then decide to sell at the same time as well and rush to USDT also. But remember, guys, for me, in terms of trading, I'm always going to be favoring what's going on in the chart. I don't care about anything else. I don't care about what I think it should be against what it needs to be, because ultimately the candlesticks are the result of people's impressions that have been made on them by the market maker, by news articles, everything that is influencing people to buy and sell. This is the result of it. And when you come to seeing certain patterns in the chart, there's only one thing that is left for you to do. You can use so many confluences to work out if price is going to go up or down. What can you do to improve the chance of your trade playing out? You trade at the right time. And the right time is Tuesday morning, 8 a.m. UK time. Okay? That's the start of the London session. And then you have the New York crossover at 2 p.m. London time. Okay? And then, of course, the end of the session is 10 p.m. London time. All right? And that will be the end of the New York session. Trade Tuesday, Wednesday, and Thursdays. Forget any other day. Because the volatility happens at these points in the week. Friday, okay, it can get crazy. The weekends, they're just as bad, but people can exploit the weekend. That's based on your, what you understand about trading and the hybrid system, and if you are able to exploit it. All right? A couple of textbook trades. I keep doing this stuff, man. It winds me up. Keep drawing out on the chart. Forgive me. It wouldn't be a video without any boomer moments. Mad love and respect to all the guys that love the boomer moments. So when you're coming to the chart, all right, and you're asking yourself, right, what can I do? Where can I trade? What can I achieve today? What is there for me? All right. The first thing you want to do is you want to say to yourself, where have we come from in terms of Asia? So the last video that I did talks about what the importance of the sessions and how they can help you understand how you can exploit any movement in the charts. Now, guys, remember, we've got this situation with news going around the world. So there's not really any normal circumstances, but the principle is still present, all right? Even when you see these big red vector candles appearing here and green vector candles right here, all right? You can exploit them. So here's an example of how you would be able to exploit this sort of range right here. Mark up on the 1 hour time frame and establish where you are. What can you see in the chart? Are they favoring higher prices or are they favoring lower prices? Do we have a pattern? Is there a development of a pattern somewhere? What can we see? Okay, so we then say to ourselves, all right, let me just mark off some structure in price. Could this be a development of a W formation? Okay, let's make the assumption. All right, so then go into the smaller time frames. That's the 15-minute one. And then you come into this zone right here. Okay, now just remember, this is what I'm saying to you is this is based on you witnessing these red vector candles. It's easy to talk in hindsight, but just go back in the charts. I promise you, go back in the charts and you will see it for yourself. You will see how they do the same thing over and over again. It's crazy. All right. So you've witnessed this red vector candle to the downside. And then you say to yourself, okay, then by these candlesticks, I can expect them to move higher. Why? Because when they move with aggression and break below the moving average and they don't follow through with the third candle. So if you see one vector and then a second one afterwards, focus on the actual candlestick itself. Does it look convincing enough for you to believe it's going to go lower? Where has it come from? Only a few moments ago, they were dropping price to the downside, and then they're going to try and do the same again. Look left. Can you see anything? Are there any vectors in the zones? No, but you can see they are favoring lower prices to get shorts hit to the downside so that they can actually come back up and hit their liquidations. Remember, the market maker is building his shorts, okay? Then when you see price moving up, you've got moving average crossovers. So that's another aspect of setups that you can take advantage of. Wait until price has formed a clear break away from the moving averages, because you can see in this range right here, guys, there was no activity. Just look at it. 50 EMA was flat, 200 EMA is flat, 5 and 13 EMA were not expanding away from price. There were so many factors here. You could have even just simply marked off a limit order in this area here on the assumption that they were going to come back and recover this red vector. So in other words, if I were to seal off the chart right like so, you could say to yourself, all right then, if they're going to come back up and recover this candle, maybe I don't want to sit through this because I don't know if they're actually going to drop because the moving averages are pretty flat. All right, so I'm going to wait and see if they actually can come up first. And I'm going to place myself an order in this area here. All right, I'm going to start off with a small order there just to test the range in case it decides to come back down. And then I'll put another order up here on the assumption that if they do break above that zone, breakout traders are going to get excited. So I can naturally anticipate some liquidity coming in that zone. I can exploit that and try and profit from a move from this point. And once the market maker breaks out from that range, I'll be looking to take out a profit. Okay, now when it comes to placing your stop for these two plays right here, base them below the moving averages and try and make it a decent distance so you can allow price to breathe. Okay, so look at the previous lows in the chart. If they've struggled to not come back down to this range right here, then there's probably a good chance they're not going to come back to it anytime soon. So you could also place your liquidation point right here on the principle of these two orders being sat. All right, so then when you press play, price moves forward, we pause it, you can see that price is now coming up towards your entry point. It's the daily open nearby. They've recovered all of the vector candle, but you want to make sure that the actual move does actually play out in your favor, because if they can come up to this vector candle and completely reject it, okay, which is sort of what they tried to do in this zone right here. So look, they came up to it, triggered it, but then they snap back down again. Look at this candlestick right there, if you can see. A little doji candle, as they call it, comes up towards it, taps that zone. Look at the precision right there, man. It's crazy. And then the next candle comes down and snaps back up again. Okay, so you've had your order filled. Happy days. Your stop's all the way down here. You ain't got nothing to worry about. So then you've got the probe bet. Everything is working in your favor. Prices above the 5 and the 13 EMA. Moving averages are pointing upwards. 50 EMA is pointing upwards. Daily open is present. Where are you in terms of whole and half numbers? You're breaking away from the 38K range? Yes, you are. Look at that. Moving above the 38 zone, building the longs below key notable areas to break through at the best possible fill. Look left and you can see previous wicks where retail traders would come into the chart at the belief price was moving higher. Look what happens. They break out. So that position now is in a good profit. And look what happens to price. It moves up. When you see the presence of a blue vector candle, you know things are starting to rise, but they can also imply that things are starting to slow down. All right. So when you've got sort of plays like this, ladies and gentlemen, and you've got an entry where you are exploiting the deviation away from the moving averages, which is another one of these setups. All right. If you come to price on the 15-minute time frame and you notice that the moving averages are flat, be prepared for volatility. Mark off the highs, mark off the lows. All right. Put orders in certain places where you believe that if they do break through, is it going to trigger more traders to step in at that point? Because in this area here, you can see that they're already looking to try and move higher because they keep spiking up with vector candles. Market maker wants higher prices. He doesn't care that he's inducing traders to believe that price is rising. He wants to make sure that when he moves price up, he gets his shorts filled at the highest possible point. Okay, and then he can close other longs that he's been building and build longs in this zone and play the game continuously because traders are putting orders in these areas. So in terms of looking for setups, ask yourself the question and say, you know what, where in the chart am I able to see if price can make it to that zone? What are the chances that I'm going to have a trade set up in that range, and is my order going to get filled? And these zones right here are a classic example of. However, be mindful. You may have had the same principle with this candlestick right here and this candlestick right here, yet when this play came out, you wouldn't have survived very long because it came straight back into the range. All right? But look, the moving average was coming into contraction. You can see that. So whilst this was forming out, it was coming closer and closer. You don't want that. You want it to be expanding. Never trade contractions of moving averages. Don't trade them when they're coming in. Trade them as they're expanding out. Yeah? I hope this video helps. Okay? I hope it brings you into a little bit of an understanding of my mindset when I'm looking for trades. All right? These are the sort of things that I like to look for. And just, watch the video over again and just try and review what I'm trying to say and do here, ladies and gentlemen. Okay? Remember, not every trade is going to work out the way you plan it. But the only way that you can actually improve the chances of a trade playing out in your favor, all right, is if you use the right amount of risk, which doesn't shake you out of your trades for you to only witness it going up in your favor anyway. That is so crushing. It's horrible. Okay? Come away from the idea of getting trigger happy with leverage. Don't be interested in leverage. Be interested in the execution. All right? Mad love and respect to every single one of you beautiful people. Be sure to like and subscribe because I'll be going live again tonight at 10 p.m. London time to see what on earth Bitcoin has been up to today. All right? Take care of yourselves, gang. Peace.